This episode of Bulletproof Cash Flow is brought to you by Realty Dynamics. Learn how people like you can build substantial passive income while creating wealth for the long term through real estate investing. Visit rdyne.com. That's RDYNE.com.
Giving me a pro forma to get my business, that's not going to help me and my investors. Someone that we can have some really good conversations on our properties, on what's needed, because maybe my business plan, we need to pivot, and I want their ideas or another property. So I'm looking for a partner that has a tremendous experience in that marketplace. Even though we bring that market experience as well, I want them to add more value and be able to push back when needed.
Working because you want to, not because you have to, is financial freedom. And we want to help you create that. Welcome to the Bulletproof Cash Flow Show. We're going to teach you how to achieve lifetime financial freedom through real estate investment. Your host is a multifamily syndicator and property developer. He's done deals reaching into the hundreds of millions of dollars. You'll hear from experts in all aspects of real estate investment, finance, development, and management. Everything you need is right here. This is the Bulletproof Cash Flow Show. And this is your host, Augustino Pintus.
Hi everyone, it's Augustino. In the real estate game, operations is critical to running the asset right. This means not only selecting the right property management company, but also the right asset manager to track their performance and making sure that it is hitting all of the targets that you defined at the very, very beginning when you acquired the asset. Now, our next guest knows all about this. He has more than 30 years of operations and management experience and over 20 years of real estate investing in more than 3,000 apartment units valued at over $250 million. Now, on his show, Real Estate Investor Podcast, he focuses on educating syndicators and apartment owners on how to build systems and manage their properties more efficiently to become best-in-class operators. Now, with all that, I'd like to welcome Gary Lipsky to the show. Gary, buddy, thanks for coming on, man.
Yeah, thanks for having me. I appreciate it.
You bet. Now, guys, like what Gary has to say, you can reach him via his contact page at breakofdaycapital.com. Okay, Gary, go ahead and tell the listeners a little bit about your journey.
Yeah. So, should I start real when I was younger, or like how long ago?
How about when you made this transition, getting away from whatever it is you were doing to this? That's probably a good place to start.
All right. So I started investing in real estate in 2002, but really I didn't get into it full time and a much bigger scale. At the end of 2016, I sold a business. We ran after school outdoor education and leadership development programs throughout Southern California, working with 9,000 kids daily. But that first year when I sold that business, it allowed me to start investing in other people's deals and really educating myself. I had some time to really just go full bore into it. And in real estate, there's so many different ways to make money, as you know. And I found multifamily, which was a good fit for me because it was running businesses. And I've run businesses before. So that kind of opened my eyes. And originally, as an entrepreneur, I wanted to do things on my own and slowly build up my resume. But quickly realized real estate is a team sport. If I partnered with other people, we could scale and go bigger much, much faster. So that was really the beginning of my leap into multifamily full time.
It's funny that you pointed out something that many people forget is that you don't just do real estate. Like many people just, and I'm doing air quotes here for those that are listening, do real estate. Each asset is its own business, essentially, right? And it's funny how you've referred to that. I mean, I haven't said that in a long, long time here on this show, but that's absolutely right. Each one has its own P&L, its own balance sheet. Each deal is its own business. And those people that stay there, that live there, are your customers, right? And thus, you have to do the marketing. You have all that to contend with, the management, and of course, the operations of the asset too. So, like, how did you eventually figure that part out in terms of, really understanding some of the intricacies? Like, did you discover it by mistake, or was it something kind of just you figured out of necessity?
So, there's a lot of education out there, and part of it was for us like common sense, and then just kind of tweaking and learning, and you never stop learning. Things constantly evolve and change, and so we had one spreadsheet that was kind of like our KPIs, and over time we're just constantly improving it, tweaking it, things that we wanted to see. So it's your learning never stops, but it's just building upon your knowledge. And as you get bigger, like, okay, well, we've got to figure out how to do this better and more efficiently. So just and sharing best practices with other people, getting ideas from others and sharing ideas that we're doing. So it was evolved over time to kind of have like a best practices.
You know what? Doing the KPI practice, your key indicators. I'm assuming you guys are doing it on a weekly basis, right?
Yeah.
Yeah. So what we do for those listeners out there, it sounds like we both do the same sort of thing. You're doing a weekly call with your property management team. You're going through the actual targets of the deal. What is your occupancy at? What is pre-leased? How many leads came in? How many of those leads did you close? How are they marketing? Whether that's more of a discussion more than anything else, but really it's going to drive how many leads. I mean, all of those sorts of things, right? So, but it sounds to me like you actually had the KPIs figured out, but I'm guessing that you kept on adding them as you went along, right?
Yeah. And we use Google Docs, so we're tracking it from the first week we have the property to till we sell it. So it could be 2, 3, 4, 5 years of data across the whole property. So we can look back at any period and go, where was our delinquency on the second week of the month during December? Does it differ from April? Where was our occupancy? All these, key performance indicators to make sure that we're constantly improving, and not just, going flatline. And that's not going to help us when we go sell the property. We want to make these constant small tweaks that over time have a huge effect on the value of the property.
Yeah, the only time it's good to have a flat line is when it's at like 95 to 96%, right up there somewhere. that's the only time.
But even then, so okay, how do we improve income and other things? Are there any expenses that we should be bringing down? Are there marketing efforts that aren't bringing in results? And so do we tweak there? Because marketing actually really, it's never consistent. And for each property, it could be completely different, even in the same city. So we're constantly evaluating that and seeing what's working, where are our bottlenecks. People get content very easily. So we're always looking to constantly push the, raise the bar,
It's interesting that you track all of the numbers right from the very beginning. We do the same sort of thing. And what we do is we're looking for those trends, right? We're looking for trends, the same way you do too, right? And this is an important thing to reiterate, because the trends of which way, say, your occupancy is going, if it starts heading down for the last 3 weeks, chances are for week 4, if nothing's changed, it's going to go down again, right? And as an owner, you're trying to manage against those sorts of things to figure out like, what's going on with the management team. Maybe someone's slacking off. Maybe someone's sick. Maybe they just gave up and they walked off the job. Who knows, right? But these are the types of things that you're trying to manage for is the trends. The trends tell you everything, right?
Yeah, absolutely. And that's why having all these different, each week is a Google sheet, and we could look at it over a period of time to see, where, are we trending up? Where, is this happens yearly, and something to look at, and then how do we fix it? So yeah, trends are super important.
Yeah. Well, now, and your properties are located where? Are they in cold weather areas?
No, warm weather. So the bulk of them are in Tucson, and then we have one in Phoenix.
Yeah. So, up here in the Cleveland market, I find that usually October through February, things really slow down with lease ups, right? Nobody wants to be outside. Nobody wants to be cold and try to move heavy stuff in the wintertime, especially December, January. Nobody wants to move in December or January, right? So do you find the same sort of thing happens out there, or is it pretty much movement all year round?
No, it definitely dips. I'd say more like November, December because of the holidays too. But we have a significant dip in pushing occupancy. And even if we drop rates, it doesn't really have much of an effect. So we've learned to not even really drop the rates at that point, because we're just hurting ourselves long term. So, ride through that wave and look to minimize the lease up during that time, and try to push more to when people in the spring, when they're looking for new apartments, stuff like that.
I see. So are you doing something special then before when that little dip is about to take place? Are you doing anything with the management to either incentivize the PMs or the asset manager to somehow say push rents up, or not push rents up, but push up occupancy or anything else like that? Or are you doing stuff like that to try to bring that number up?
Well, yeah, in September, October, we'll want to push the occupancy. But what we also are doing is looking to move people out of that renewal of November, December. Not totally, but more push it towards spring when there's a lot more activity where we could take advantage of it. So maybe we'll do 9-month leases or 15-month leases during November, December. Again, not bringing it down to zero, but just minimizing it and pushing it more to where a prime leasing time. Interesting.
Are tenants usually pushing you back on stuff like that, or are they okay with signing a 9-year or 9-month rather? I'm just curious.
Yeah, not everyone wants to do it, but it's, even if we could tweak 5%, we still see a little bit of benefit. So it's not a massive change, but just a little bit. If someone is willing to do it, then great. If not, no big deal.
Yeah, I mean, it's the way I see it. Even, and I don't know how you guys do your leases here, but if, say, it's about to end in December or January or something like that, maybe what you do is you add a couple extra months at a discount rate or something like that. You ever do anything like that to get creative?
Yeah. We've done that when leasing activity is a little slower, but and which is November, December, we can add like a month, or maybe delete a month if they prefer it. So yeah, there's ways to kind of tweak it. We're always looking to come up with different ideas to separate ourselves.
Yeah, and also it sounds to me like you guys are also staggering those leases out too, so you don't get all hit at the same time, just in case you do get a bounce, right? Yeah. Or a bunch of people bouncing out at the same time. So the last thing you want to do is, go down 10% or whatever on a property because a bunch of people are just leaving the asset all at the same time. It's the last thing you want to have on your hands, right? It's Absolutely. A lot of unit turns. It's a lot of unit turns. Yeah. So are you finding in that market then, in terms of the people that stick around, are they sticking around for longer periods of time, or like is it typically like a 1 year type scenario, or how does that work out there?
You get some people that will stay 10 years, some people that will stay 1 year. It also depends what's going on with the economy, what kind of where we are in different periods. But I feel like we have a really good renewal rate, and people like the product that we put out there. We want to put out more amenities, have better staff that care for our properties, and then charge what someone that's of equal or less than what we value our property at, so that we can have higher occupancy. We could push lower our turnover costs, and at the end of the day, it goes to our bottom line. Our NOI is higher, and we could sell it at a premium. So we're always trying to provide a quality product from many different angles: amenities, staff, safer, nicer community, things like that.
Now, have you ever had to switch out your property management yet?
Yep. We had a property in Phoenix where first we had to swap out our regional. We swapped out our property manager, and we were definitely too patient too long. We're trying to, the person was a nice person. We liked them, but at the end of the day, we weren't getting the results. So, when we start, we'll set a bar really high. We'll set the expectations, and if they don't meet those expectations, then we have another conversation of reiterating what we're looking for. We secret shop it, because just because they say it doesn't mean they're getting it done. So we'll come to the property. within a month, every month we're visiting our properties. They're all kind of bunched together for the most part in Arizona. We're not spread out all over the country, so it makes it easier when we're looking for new properties. We could visit all of ours, and we're making sure what they say is getting done, and that's not always the case. So, I spoke to the owner of the company and created our vision, and we were making progress, but eventually we were going backwards. They had a lot of turnover. They were getting bought by someone else, so we did have to make a change. And it's unfortunate. It takes the other company a few months to get up to speed. It's not like boom, they're off and running, because you'll find a lot of skeletons in the closet when you switch over. So it took a while, but unfortunately, you have to make those changes every once in a while.
No, nobody likes doing it, and it's a real pain. It's not easy. It's not, and you hurt a lot of feelings too, I'm sure.
Yeah. But we're still friendly with the owner of the company. Like we were, it's having those tough conversations. So he knew exactly where we're coming from. There's only so much he can do if he's, turnover. We're not getting what we need. And so he knew that, that we were frustrated, and we gave him every opportunity, and he just unfortunately couldn't deliver, and it was a little bit out of his hands. So, we ended on good terms because we had those conversations. And I mean, that's not always the case. Sometimes you're working with people that are just unreasonable and aren't accountable. He certainly was, and he knew it. So we made the change, and we were better for it. And I wish him and his team the best of luck.
I think that there's an important lesson there too. Is I've had to switch out property management companies before, and yeah, it is a real pain, and nobody likes to do it. They kind of hope and pray that the current guys are going to get it together, but sometimes those hard decisions need to be made, because if you don't, they'll sink your whole deal. They will trash your deal, and that's the last thing you want to do, right? And it's a hard decision, but you have to make it. If someone out there is on the cusp of making that decision, make it quick, because the longer you keep it in there, the harder it becomes, right? It doesn't become any easier. It doesn't become any easier.
Yeah. And you'll find all the things that you thought were getting done. Because as an owner, you just invoices that are stuck in drawer. There's just like little things that add up that will set you back. So yeah, if your gut is telling you, and you've given that person a chance to right the wrong, and they don't, then you can't delay. You've got to make that change.
Yeah. So now, what sort of things are you looking for in that property management company? Because I know you have a lot of units. So are you looking at their ability to manage those types of assets in terms of asset type, A, B, C, D? Or are there anything other special about that property manager that you're looking to basically hand over all or parts of your portfolio?
Yeah, I want them to be progressive, like open to change and constant improvement. And some management companies just aren't open to that. They'll send us a report every week, but it's a PDF. It's like 19 pages. Some of them might be like sideways, we're like, they'll send it to us, but we're like, you've got to use our Google form, put the information, because it's all in one sheet and we could see it, boom, versus me having to go through 19 pages. I have to save it every time. I can't track it. So they've got to be able to be progressive. They've got to be able to hold their team accountable. Like you said, same type of asset that they're managing. There's got to be give and take. I don't want them to just agree to everything I say. I want them to give pushback. And I also want them to add value when we're interested in another property in that area. Are you giving me a pro forma that really matches realistically? Not just giving me a pro forma to get my business. That's not going to help me and my investors. So someone that we can have some really good conversations on our properties, on what's needed, because maybe my business plan, we need to pivot, and I want their ideas, or another property. So I'm looking for a partner that has a tremendous experience in that marketplace. Even though we bring that market experience as well, I want them to add more value and be able to push back when needed.
It's funny you mentioned something that is worth highlighting just for a second for those people that aren't familiar. When you are looking at a deal and you want to, you have your pro forma, but one thing that we do is we ask our property management team to create a pro forma based on their own data and their own research and see how it compares. So I assume you guys do the same sort of thing.
Yeah, absolutely.
And so it's that part is absolutely huge, because then it's like, I'm not saying that I have all the answers. I'm sure you'd never say you have all the answers too, right? But if they're like totally way off in terms of like either way, way, way too high or way too optimistic, then conceivably, yes, they're trying to get your business. They want you to buy the asset just so they can get paid, right? I'm not saying they always do that. I'm just saying that could be a thing. So to your point, right? It's kind of like they'll put some optimistic numbers in there just to get the deal, just to make sure you can get the deal closed, so that makes more business for them. So like the incentives are not exactly totally aligned there, right? Like right. They just want more units so they can go manage it. That's it. That's all they care about, right? Yeah. So that's interesting. Another interesting concept, two other things actually, is matching up the right management group or company with the asset class. I've seen cases where a group would hire a management company that's known to manage, like, say, A and B type assets, mostly A, and drop them into an asset that's more like a C or even a C minus, and it becomes a total failure. It's a total mess, and people make that mistake all the time. They just assume property management is property management, but it's not always the case, right? Yeah,
absolutely. If in that case, you're going to lose a lot of staff because they're not going to be able to handle the residents that are, it's obviously a rougher tenant base. And so it's not easy. So yeah, you could have a lot of turnover, and the management company may have super high expenses because they're used to, an A-class property or whatnot. So yeah, you've got to match the property management company to the type of asset. And what I suggest is walking around to other assets in the area and seeing what they manage, and see, is that the property, is it getting run the way you want it to run? Is it clean? Are the staff friendly and having a call to action if you're looking to lease? Whatever it is, you want to really make sure they're operating the asset that's similar to yours the way you want your property to be run.
Yeah, like secret shop their other clients, basically, right? That's what you're saying. That's huge. That is really huge, because that'll give you a really good indication at least how they are going to manage your asset. Sure, you may have different people, right? If they hire a new regional, but if the company is well run and they have a directive and they hire their regionals to basically follow the same sort of standard, then you should be okay with whatever they do, right? But yeah, it's tricky. I mean, I think it's very, very tricky. It sounds like you gave that one company a lot of leeway. How much leeway did you give them in terms of months before you realized you have to like cut the cord and get rid of them?
Yeah, it was quite a few months, and because I'm loyal to, the owner of the company was when I was looking to make changes, he would always jump and react and make sure that my needs were getting met. But ultimately, at the end of the day, they couldn't get it done. So I want to give him, whoever I'm working with, a chance to succeed. And the longer I built that relationship, I'm going to give a longer leash, quite honestly. If it was maybe a shorter relationship, maybe I don't give them. But because we had a good working relationship for a while, I gave him more of a leash, and ultimately they didn't get it done. But it is what it is. Then you move on and make the best of it.
I mean, I think it's hire quick, fire quick. That's really what it comes down to. I mean, yes, it's tremendously expensive and a real pain, and a pain for the people living there too, because now they have to send their payments into this system. Oh, now it's going to be that system. It sets up a whole bunch of frustration, 100%. But it's like, if they're not cutting the mustard, yeah, you got to get rid of the property management, because, like I said, they could sink a deal, right? Absolutely, they can. So when it comes to the marketing side of things, how do you handle marketing? Because again, you have those assets in various places, and I think you already pointed this out, which is something I truly believe in. Each neighborhood is its own market. Each area is its own market. So how do you handle marketing? Do you have the one property management team handle marketing like nationwide, so to speak, or are they? Do you have them out? Do they outsource it to a local area? How does that part work?
Yeah, so we'll use typically like apartment lists. There's some online resources that we use. Maybe Zumper, or different things for different properties, and what may work for 6 months may not work for 12 months, or may not work for a property 3 months down the road. So we're monitoring where our leads are coming from to leases. And so we could get 100 leads from one thing and maybe get one lease, and get 3 leads from one thing and get 2 leases. So the one that's bringing in 100 leads, it might not be the right customer. Maybe they might not meet our income requirements, or maybe it's something else that's sending the wrong message and we're not getting the residents that we want. So maybe it's tweaking our message. Maybe we want to get off of that platform and get on the platform, double down on the platform that we got 3 leads and 2 leases from. So we're just constantly monitoring that. It's not a foolproof system with the property management company and the property manager, because some of it flows really nicely through the software, some of it doesn't. So there's a lot of reliance on the property manager putting in that information as well. But we're addressing it on a regular basis to make sure our dollars are getting spent the correct way. It's an expense where, when we're underwriting deals, we see people spending 2, 3, 4 times as much as we're spending, and it's insane. So there's tremendous opportunity when we're looking at that for new properties and trying to understand what the heck is going on here. Why are they spending so much more money than us? You shouldn't have to, if you're doing it right.
Yeah, well, the marketers really have to know what they're doing. I mean, that's really what it comes down to, because a lot of marketers will just churn and burn. They'll start spending money on a bunch of stuff that doesn't work. And but it sounds to me like you guys have a really good process together to really understand how each marketing dollar is being spent and attach it to an actual conversion. I think a lot of people really miss the mark when it comes to that. Is there's a cost associated with bringing in a lead, and that's the labor, that's the posting, that's the preparation of the actual advertisement itself, I guess, which is the labor, I suppose. But all those different things total up to a number, and that's your cost of acquisition. And if the more money you're spending on acquiring that one lead, obviously something needs to change, right? Because it's not, the conversion is just not there, right? And that's huge. That is absolutely huge. But it sounds to me like you're building all that into your underwriting, something you just mentioned a second ago, which is absolutely key, right?
Yeah. We're always looking, you're having a body of work. We could see how much it costs for renovations, how much it costs us for labor, all these things that we can apply to any deal we're looking at, and have all those, that's the beauty of, like you do, focusing on a market or a couple markets, and not, looking all over the country, that you have that expertise and you have that experience, and so it's easy to apply it and know that you can execute on your business plan.
Yep. Now, when it comes to asset management, and for those listening, for those that don't know what I mean, you have property management. Those are the folks on the ground or even at the company that are managing the property. The asset manager is the person who represents the ownership side, and they're the ones that are making sure that the property managers are doing everything they need to be doing in terms of not only the work that they have to do, but also hitting the return objectives that we as syndicators promise to our investor pool, right? It's a very important role. So who's handling that part right now in terms of the asset management side of things within your group?
Yeah, we have someone dedicated to that piece. Certainly, I'll be on a lot of the calls and look over everything because it's always good to have an extra set of eyeballs on it. But one person that is focused on it, and that includes the loan covenants, which are more important now than ever before, and just making sure that where everything is tracked, where all the capex, and we're executing on our business plan, because time kills all deals, and it takes longer to get vendors out there and more expensive. So we're just really got to track all of it, because it allows for pivoting. We've definitely pivoted on some of our business plans, and if you burn through all your money right from the beginning, you're gonna have problems, because things break all the time, and you certainly have some reserves, but you've got to make sure that you're getting return on your investment, and all these key factors that will pay. It goes straight to your bottom line. Like, you could burn through all your money, and if you're able to tweak the NOI and keep pushing it up because of your capex projects, that's all profit. So it's so important, and a lot of people don't apply the resources and time for asset management. They're focused on deals, and that's if you could spend the money and the time on managing your deals right, you'll make a lot more money for your investors and for yourself, and will be much better off in the long run than constantly chasing more deals.
100%. I think another key aspect, I've actually seen this, and it happened to someone. The property management company was charging an extra 1 or 2% because they deemed it now is going to be a high risk area. They didn't tell the owner or the asset manager, but the asset manager was smart enough to go through the agreement, spot like, wait a second, what? It's 5% or whatever. I think might have actually been 3%, and we're getting nailed 5%. What's going on here? And that's when they came up with this cockamamie story. And of course, they had to adjust their rate back to normal. But like property management companies, some of them, I hate saying it out loud, but you really have to be sure to track that stuff, because they'll keep on pushing for as long as they can. I mean, that's what the asset manager is supposed to protect you from, right? Is stuff like that, right?
And they'll make mistakes. An accountant for their property management company could manage 15 properties, and every once in a while they'll allocate something to your property that shouldn't be allocated to your property, yep. Or pay a bill twice there's things that happen all the time, and sometimes they're not trying to stick it to you, but they're human and they make a mistake. And so you've got to make sure you really go through that really carefully. And, every time we work with a company, they kind of laugh at like all the questions that we ask, and, when we go through the financials, but, we find stuff, and we may be wrong, but we're just, at least, we want to know why that was allocated for that, and it should be allocated here and whatnot. So, it's super, super important to go through all the financials, track everything. You'll benefit hugely in the long run.
Right. They're always laughing up front when you first talk to them, but 6 months down the road, when they pay the wrong invoice, who's laughing? You're not laughing. I know that. I know you're not laughing, right? No one's laughing at that point, right? It's just bizarre, right? But yeah, you're right though. It has happened. It's happened to me where the wrong invoice gets paid. It's usually not a big deal, but I mean, in terms of like, it isn't like we're losing hundreds of thousands of dollars here, right. But it's definitely a snafu that could have easily been avoided if somebody were just paying attention, yep. Right? That's really what it comes down to. And one other thing I wanted to explore briefly here is how you handle unit turns, because a lot of these property management companies will charge a construction management fee or some sort, right, over and above the regular management fee, and so they have carte blanche in some cases anyway, to just go ahead and just do a complete unit turn, and since you may not be local, and it isn't like you're going to inspect every single unit. you have to kind of like take their word for it, right? So how do you define anything around what a unit turn costs, or do you set certain caps that only allows them to spend X amount of money, or like how do you manage that part?
Yeah, so we'll have a budget for each unit, and the regional manager needs to put in what gets done for that unit, and how much it costs. We wanted the breakdown for every single unit, and I know it could be a pain for them, but it helps us to know, and this happens a lot. One unit's like 14,000, another unit's 8,000, and sometimes it could be the same stuff that's getting done, and there's a gap. So we want to track everything, and so working with them and like I said, asking a lot of questions, trying to figure it out, and that helps us when we're looking at new properties. What it's going to cost, where the trends, as you mentioned earlier, are the costs trending up, and so that we know we have the right underwriting for a future deal. We know that, okay, maybe, we budget for 100 units, but at the end of the day, it's costing us more. So maybe we'll get to 90. And we never end up doing all the budget, all the unit renovations that we say we're going to do anyway. I mean, I'd rather have a much bigger budget and have excess. But it just helps us, know where, how much they're going to spend, and they know what we're looking for. So they're, if we don't need to do the floorings, they're not going to do a whole unit just to keep it, perfectly the same as the other one. That if the floors are good, they're going to keep it. And it's by walking the units with the team to know what we're looking for. Once they've turned a unit, we'll inspect all the turns that they've done to talk through it. What was perfect, what wasn't, how do we improve it? And we're not trying to catch them doing something wrong. We're always trying to catch them doing something right, so that they've got that ownership thinking. They're working with us and for us versus they're just an employee. And we don't want that. We want them to take real ownership, and that's when you can really skyrocket your returns.
Yeah. I think it's what you said a second ago really resonates, because a lot of these property managers still want to like itemize each thing that was done in a unit. It is a pain, but here's the thing: it's when you have all the receipts documented, and in your case, I like what you said earlier. It's like they're all submitted, and you get to see them all right side up in terms of the pages. That's all information that will eventually make to the hands of a potential buyer for the asset. Because the buyer or the bank is going to ask, show me the receipts of all the work that was done. And if you don't have it, or you have to start shaking people down for that information, you're adding time to the deal. And like you said, time kills deals, right? Whether it's a bank, a refi, a sale, whatever it is. So having access to that information, itemizing it, putting it into a nice system where you can easily pull it out and deliver it to a potential buyer or a lender is a very, very important thing. Yeah. Is the property manager going to be irritated? Yep. Too bad. So sad. Has to be done. I mean, just like that's just part of what we have to do as the guys who put the deals together. It's vitally important. So
yeah, we'll set really high expectations from the beginning, so they know the target, and because we're treating them well, we get to really know them. They have no problem going that extra mile.
Yeah, absolutely. Well, we covered a lot of stuff here today, Gary. So if you had a piece of bulletproof advice for someone that really wanted to improve their operations, what advice would you give them?
Have someone focused on that asset management piece. I actually have a book, Best in Class, that talks about operations, but you don't have to spend any money. You can use Google Docs to track everything and have everyone involved have access to it. So it doesn't, you don't need, $10,000 a year software or whatnot. It's just track everything, timeline, figure out where the bottlenecks are. It's not brain surgery. I think anyone can do it. They just have to put in the time and have the discipline to track everything on a consistent basis, and that will cover a huge part of the asset management piece.
Awesome. Love it. All right, guys. Well, if you want to reach out to Gary, you can reach him at his website at breakadaycapital.com. Hope you got some good insight on the operations side. Operations is a huge topic. That's where the money is really made. The money is not made when you acquire the asset. The money is made when you run the asset properly. you refi, you pull equity out, give it back to the investors, you sell the asset, you do that play. It's typically where the money is made. And running it is vitally important, and operations, just as Gary said a second ago here, is a big part of it. So check out his book too, okay? I've seen the reviews. It sounds like a great, great read. So thanks for tuning in, guys, and I'll see you next episode. Take care.
You've been listening to the Bulletproof Cash Flow Show. We hope you've enjoyed the show. We know we had fun. Make sure to visit our Apple Podcast page and leave us a 5-star review. We hope you've gotten some useful and practical information from the show. For real estate coaching, events, and resources, hit up bulletproofcashflow.com. Till next time.
No information in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this show are limited to accredited or sophisticated investors. Any investments will only be made with proper disclosure and subscription documentation and subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice.